Factory activity shrinks in China again in December, reinforcing the case for pro-growth policies in the world's economic powerhouse. Other headlines on Reuters: the yuan hits a record high, heading for gains of 4.5% this year, with more upside seen in 2012. Spain is set to fire the opening salvos in the Eurozone's latest battle to bring down public spending. More on that story later in the programme. And Japan's ruling party agrees to postpone a rise in sales tax. The first increase won't now come until April 2014. Well, as the last trading day of 2011 draws to a close in Asia, regional equity investors are counting their losses. Here's Reuters' Tara Joseph in Hong Kong.
Hi, Nigel. It's a sobering end to the year for Asia's stocks, and this in the part of the world that is supposed to be among the fastest growing. But the Eurozone crisis, a massive earthquake in Japan, and a slowing of China growth all took its toll on the markets. Japan's Nikkei up slightly today, but overall the index down 18% this year. China shares even worse. The Hang Seng down about 20% this year. Many expect China shares to remain under pressure in the early part of 2012, and analysts say a turnaround unlikely until the second half of the year, when China easing measures start to feed through into the economy. But for now, as you mentioned, another weak China indicator. HSBC's Purchasing Manager Index shows activity shrinking again in December. HSBC's reading ahead of official figures say PMI came in at 48.7 in December, just up from a 32-month low of 47.7 in November. The HSBC PMI has been mostly under 50, the line between expansion and contraction since the summer. That's it from me, Nigel. Happy New Year to you, and back to you in London.
Same to you. Thank you very much indeed. Tara Joseph there in Hong Kong. Well, closer to home, later today, the Spanish Prime Minister Mariano Rajoy is due to announce detailed spending cuts. The new centre-right government needs to find savings of around 20 billion euros to meet its deficit target of 4.4% of GDP next year. The Spanish measures follow a 33 billion austerity package introduced yesterday by the Italian Prime Minister Mario Monti. Meanwhile, Germany's Finance Minister Wolfgang Schäuble has told Handelsblatt newspaper the Eurozone should stabilise next year and has ruled out any breakup of the euro. Let's hear now from Alessandro Mercuri, interest rate strategist at Lloyds Bank Corporate Markets. Good morning to you, Alessandro. The European debt crisis means it's been a turbulent year for the bond markets. Are we in for more of the same in 2012?
Well, it's going to be a bumpy road. I think there is little doubt that the euro area crisis will keep being the key market driver over the year. And I think many market participants are psychologically prepared for dealing with event risk. In particular, the near-term event risk will be probably the possibility of rating downgrades on European sovereigns. So this makes for a wide range of both yields and country spreads. But over the year, we see higher and steeper core yield curves, because a lot of bad news is already priced in. It has been priced in since August, and barring extreme events, they should be rising.
Gilt yields have fallen to record lows here in the UK on safe haven flows. How would you advise clients to how to play the crisis going forward?
Well, obviously, the UK is vulnerable to euro area developments. 40% of net exports of the UK is with the euro area. And there are other channels by which the euro area impacts the UK, for example, financial instability or impact on consumer business confidence. Having said that, the UK gilts are likely to retain safe haven status, not only because, obviously, investors allocate their funds in relative terms, but also because we see the Bank of England keeping pouring money into the economy. Probably, please.
Okay, Alessandro, thank you very much indeed for that. Alessandro Mercuri there. The top world news story on Reuters this morning is the North Korea's new leaders have lashed out at the South in their first communication with the outside world since the death of Kim Jong-il. The regime, headed by son Kim Jong-un, says it will not be changing its confrontational stance towards South Korea. And the US has signed a $29 billion deal to sell 84 new F-15 fighter jets to Saudi Arabia. Washington says the deal should boost regional security as tensions mount with Iran. On Twitter, the top story trending from Reuters.com right now is Russia battles fire on nuclear submarine. Authorities tried to submerge the submarine to douse the blaze at a dock near the northern port of Murmansk. The Russian emergency ministry said there had been no leak of radiation and nobody was injured. European stock markets now opening for the last session of a dismal year, which has certainly seen many leading banking stocks lose half their value as investors sought refuge in safe havens such as bunds and gilts. As you can see there, probably once again thin trading, but slight gains across the board for the European equity markets. That's all from us for now. I'll leave you with our picture for the day, which today comes from Reuters photographer Lucas Jackson. Organisers toss confetti from a window in Times Square in New York. The annual airworthiness test forms part of the preparations for New Year's Eve celebrations. I'm Nigel Stevenson. This is Reuters.